Welcome back to Money Market News and Updates. September 2025 stands at the crossroads of critical shifts and challenges across the financial markets, particularly in crypto, Forex, and the U.S. stock exchanges. If you're someone who trades, invests, or simply wants to stay ahead of this ever-evolving market landscape, this video will give you a thorough, no-fluff breakdown of what you can expect this month and how to navigate it successfully. Let's start with the Federal Reserve, which remains undeniably the single biggest influence shaping U.S. and global markets today. The Fed's monetary policy decisions resonate across asset classes, and September 2025 is no exception. The consensus is growing stronger around a highly anticipated interest rate cut of 25 basis points at the Fed's mid-September meeting. Markets have priced in approximately an 85% probability of this move. On paper, a rate cut generally broadens liquidity, making borrowing less expensive, which tends to stimulate risk-taking in stocks and cryptocurrencies while weighing down the U.S. dollar. But this year's Fed decision carries extra complexity. Inflation, though coming down from previous highs, still hovers uncomfortably above the Fed's 2% target. Simultaneously, indicators like the ISM Manufacturing Index show contraction, and consumer confidence measures hint at a slowing economy. The Fed is walking a tightrope, attempting to support growth without reigniting inflation. To add fuel to the fire, there's significant political tension. Former President Trump's campaign to oust Federal Reserve Governor Lisa Cook has unsettled markets. This is one of the clearest instances of political forces trying to interfere with Federal Reserve independence in decades. Such uncertainty makes the Fed's actions less predictable and raises fears of abrupt policy shifts. Next, keep a sharp eye on the U.S. dollar, represented by the U.S. Dollar Index, or DXY. This index measures the dollar's strength against a basket of major currencies. Recently, the DXY failed to maintain resistance at 98.60 and began testing crucial support near 97.70. If the DXY breaks below this level, it might dip as low as 96.70, a territory the dollar hasn't visited since 2011. A weakening dollar usually helps commodities like gold and oil because they become cheaper for holders of other currencies. It also tends to boost foreign demand for U.S. stocks and encourage capital flows into riskier assets such as equities and crypto. For Forex traders, this dollar weakness offers important clues. Pairs like Euro-USD and GBP-USD may see gains if the dollar loses ground. The Euro-dollar pair is currently consolidating around 1.1570. But could see spikes or dips as market reactions unfold, potentially drifting toward 1.13 or bouncing higher depending on incoming data. The same uncertainty applies to GBP-USD and USD-JPY, where global monetary policy differences will fuel volatility. Now, let's talk stocks. September has long been known as the most treacherous month for U.S. equities. The statistics back this up. Historically, September tends to have the lowest average returns and is prone to corrections and increased volatility. Despite strong gains in the first 8 months of 2025, with the S&P 500 surging nearly 10%, caution is warranted. The current economic backdrop, ongoing trade disputes, mixed corporate earnings, and Fed-related uncertainties set the stage for possible 5 to 10% corrections. Investors should not overlook black swan risks from geopolitical tensions and unexpected policy announcements. While the Volatility Index, or VIX, remains relatively calm now, it's often deceptive. Calm precedes turbulence. Keep your ears open for the U.S. jobs report on September 5th and the Consumer Price Index on September 11th. These events could be catalysts for big swings. The Fed meeting on September 17th, where they will announce the rate cut and guide future policy, will be crucial. Market reaction could be swift and sizable. The weeks following this meeting could set up the tone for the rest of the year. Shifting gears to the world of crypto, where volatility is the norm and emotions run high. September has earned the nickname Red September in crypto circles because Bitcoin and other cryptocurrencies tend to struggle during this month historically. From 2013 through 2024, Bitcoin has seen an average drop of about 4.9% in September due to a mix of portfolio rebalancing, tax loss harvesting, and liquidity shifts. Last year was an exception, with Bitcoin rising 9% thanks to a Fed rate cut that added liquidity and lifted risk assets. This year, 2025, might mark a critical turning point. Institutional interest in Bitcoin and crypto continues to grow. Corporate treasuries now hold roughly 6% of the total Bitcoin supply, representing strong long-term support. Meanwhile, U.S. Bitcoin Exchange Traded Funds, or ETFs, have added a staggering $50 billion in net inflows by mid-2025, reducing volatility by approximately 75% compared to last year, and creating what many analysts call a price floor for Bitcoin. Bitcoin opened September 2025 around $108,253, but has dropped about 6.5% since August's close, trading below key technical levels like the 50-day and 100-day moving averages. Technical analysts warn that if Bitcoin breaks below $105,000, it could slide quickly toward psychological levels near $100,000. Conversely, if the Fed delivers the expected rate cut and the dollar weakens as predicted, Bitcoin could rally toward the $114,000 to $116,000 range and aim to test resistance around $125,000. The crypto market's psychology is important to note. The Crypto Fear and Greed Index, a sentiment measure, dropped to 39 in early September, indicating caution. Institutional traders remain conflicted. While ETF inflows are strong, about $751 million flowed out of ETFs in August, signaling uncertainty. Notched to this mix is whale activity, with a record number of addresses holding more than 100 BTC. These whales have been accumulating steadily even as prices waver, suggesting confident long-term bulls. Ethereum and other altcoins are also playing interesting roles. Ethereum ETFs saw about $3.87 billion in inflows in August, showing strong institutional interest. Meanwhile, altcoins like Solana continue gaining modest ground despite profit-taking. Market dominance of Bitcoin dipped below 60%, sparking a possible rotation into altcoins, which offer different risk and reward profiles. Looking outside the U.S. markets, global trade tensions remain a critical variable. The ongoing negotiation deadlock between the U.S. and the European Union have rattled international investors and affected currency markets. Asia and Europe grapple with their own inflation-growth dichotomies, influencing capital flows worldwide. Commodities like gold and oil are reacting with wild swings. Gold has solidified its role as a safe haven, currently holding near all-time highs, driven by geopolitical unease and inflation fears. Currency watchers should also monitor developments in Japan. The Bank of Japan's policy stance contrasts with the Fed's expected easing. Any hints of tightening from the BOJ could strengthen the yen, affecting the USD-JPY pair. Such divergences tend to trigger cross-currency volatility, which impact global investors' hedging and trading strategies. For those managing portfolios now, September demands vigilance and flexibility. Volatility will be both a threat and an opportunity. Proper risk management through stop losses, diversified holdings, and close monitoring of economic signals will be vital. Prepare to shift exposure in line with Fed decisions, geopolitical developments, and data releases. Also, remember the importance of technology and communication. Real-time market access, reliable news sources, and flexible trading platforms will empower faster decisions during this volatile phase. Your emphasis should be on balancing the promise of higher returns with disciplined protection against downside risks. As a quick summary, here are a few key dates and data points to keep on your radar. On September 5th, the monthly U.S. employment report will reveal how strong the labor market remains amid economic headwinds. September 11th will bring the Consumer Price Index report, vital for inflation outlook and Fed reaction expectations. September 17th is the day of the all-important Fed meeting, where the rate cut announcement and future guidance will influence asset prices profoundly. To close, September 2025 might truly test whether the markets have evolved or if old seasonal patterns will prove resilient. It's a balancing act between optimism driven by liquidity and institutional flows and caution fueled by political tensions, economic uncertainties, and less predictable Fed moves. For investors and traders on money market news and updates, being well-informed, nimble, and prepared will be the secret to weathering this turbulent but potentially rewarding month. Thank you for watching. Remember, the markets move fast, and so should your strategy.